Welcome to our groundbreaking video on mastering Bitcoin technical analysis, where we'll address your most burning questions and equip you with the knowledge you need to navigate the cryptocurrency market confidently. Have you ever wondered how long it takes to truly master technical analysis? Or perhaps you're concerned about whether specific prerequisites or prior knowledge are necessary to benefit from this content? Well, you're in the right place. Throughout this video, we'll not only answer these questions but dive deep into providing actionable guidance on when to buy or sell Bitcoin based on technical analysis. But that's not all. We'll also shed light on common mistakes and pitfalls to avoid, ensuring you navigate the world of Bitcoin investment with precision and skill. So buckle up and get ready to unlock the secrets of Bitcoin technical analysis like never before. Whether you're a beginner or seasoned investor, this video will arm you with the tools and insights you need to thrive in the ever-evolving world of cryptocurrency trading. Stick around because the journey to mastering Bitcoin technical analysis starts right here, right now. We will get started with your Bitcoin technical analysis training straight away. But first, we wanted to provide you with a free gift. Here at Finance Fitness, we are committed to helping you build wealth and financial freedom. In order to fast-track your wealth-building mindset, be sure to check the link in the description below for your free copy of the Wealthy Mindset book. The content provided in this video is for informational and entertainment purposes only and should not be considered as trading or investment advice. Please review the full disclaimer in the description section below this video. In the fast-paced world of Bitcoin trading, finding reliable indicators to guide your investment decisions is crucial. One such tool that has gained popularity among traders is the utilization of the 50-day simple moving average. In this video, we'll explore how the 50-day SMA can be used to navigate the volatility of Bitcoin markets and make informed investment choices. The 50-day SMA is a trend-following indicator that smooths out price data over a 50-day period, providing a clear picture of the underlying trend. Calculated by averaging the closing prices of the last 50 days, the 50-day SMA helps traders identify long-term trends and filter out short-term noise. By plotting the 50-day SMA on a Bitcoin price chart, traders can gain valuable insights into market direction and sentiment. One of the primary uses of the 50-day SMA is to identify potential entry and exit points in Bitcoin trading. If we look back through prior Bitcoin bull and bear markets, it appears that the 50-day simple moving average has been a fairly reliable indicator of when to stay out or when to potentially get into a Bitcoin position. When the Bitcoin price crosses above the 50-day SMA, it may signal the start of an uptrend, presenting an opportunity to enter a long position. Conversely, when the price falls below the 50-day SMA, it may indicate the beginning of a downtrend, prompting traders to consider exiting their positions. When Bitcoin crosses below or is below the 50-day simple moving average, one would be wise to move to cash, or at least significantly reduce their exposure to Bitcoin. Bitcoin is an asset with significant volatility, and once it starts moving in a given direction, it can move very fast. By using the 50-day SMA as a guide, traders can capitalize on trend reversals and maximize profits. In addition to entry and exit points, the 50-day SMA can also help traders identify trend reversals and continuations. Changes in the slope of the 50-day SMA can signal shifts in market sentiment, with upward-sloping SMA indicating bullish momentum and downward-sloping SMA indicating bearish momentum. While the 50-day SMA can be a powerful tool, it's essential to use it in conjunction with other technical indicators for confirmation. Traders should also set realistic expectations and understand the limitations of the 50-day SMA. Additionally, implementing risk management strategies such as setting stop-loss orders and diversifying portfolios can help mitigate losses and protect capital in volatile markets. Another tool that has stood the test of time is the humble trend line. In this segment, we'll explore how trend lines can be used to make informed investment decisions in Bitcoin, offering practical tips and insights for traders of all levels. Trend lines serve as visual guides that help us identify market trends and potential reversal points. There are three main types of trend lines: uptrend lines, which connect higher swing lows; downtrend lines, which connect lower swing highs; and horizontal trend lines, which represent areas of support or resistance. By drawing these lines on Bitcoin price charts, traders can gain valuable insights into market direction and sentiment. Drawing trend lines accurately is essential for effective analysis. To do so, traders must identify significant swing highs and swing lows on the price chart and connect them using straight lines. It's crucial to ensure that trend lines have multiple touchpoints to validate their significance. This process helps traders avoid false signals and make more confident trading decisions. Trend lines can also signal potential trend reversals in Bitcoin markets. When a price breaks through a trend line, it may indicate a shift in market sentiment. Traders can also look for classic reversal patterns, such as head and shoulders, double tops, and double bottoms, which often form around trend lines. These patterns, combined with trendline breaks, provide valuable confirmation of trend reversals. Support and resistance zones. Understanding the dynamics of support and resistance zones can make all the difference between profitable trades and painful losses. These critical price levels act as invisible barriers on Bitcoin price charts, shaping market sentiment and guiding investor behavior. In this segment, we'll explore how to harness the power of support and resistance zones to make informed investment decisions in the volatile world of cryptocurrency. Support and resistance zones are key concepts in technical analysis that represent levels where buying and selling interest converge. Support zones form at price levels where buying pressure outweighs selling pressure, preventing the price from falling further. On the other hand, resistance zones form at price levels where selling pressure outweighs buying pressure, preventing the price from rising higher. Additionally, support levels can become resistance levels once broken and vice versa, a phenomenon known as a flip level. Identifying support and resistance zones requires keen observation and analysis of Bitcoin price charts. Traders can look for areas where the price has repeatedly reversed direction, indicating the presence of strong buying or selling pressure. Historical data and significant price movements can also help identify key support and resistance levels. It's essential to validate these zones with multiple touches to increase their reliability as trading signals. Support and resistance zones serve as valuable tools for identifying potential entry and exit points in Bitcoin trading. When the price approaches a support zone, it may present an opportunity to buy Bitcoin, expecting a bounce higher. Conversely, when the price approaches a resistance zone, it may signal a potential exit point for selling or shorting Bitcoin. By strategically entering and exiting trades around these zones, traders can capitalize on market trends and maximize profits. Breakouts and breakdowns occur when the price surpasses significant support or resistance levels, signaling a potential shift in market sentiment. Traders can confirm these breakouts or breakdowns by observing increases in trading volume and significant price movements. Following confirmed breakout or breakdown signals, traders can enter trades in the direction of the new trend, aiming to capture potential gains. Support and resistance zones are invaluable tools for navigating the complex world of Bitcoin trading. By understanding how to identify, validate, and utilize these zones effectively, traders can gain valuable insights into market dynamics and make more informed investment decisions. Remember to stay disciplined, patient, and adaptable in the ever-changing landscape of cryptocurrency trading. With practice and perseverance, support and resistance analysis can become a valuable asset in your trading toolkit. Volume. When it comes to Bitcoin trading or investing, understanding volume analysis can be the difference between riding a trend to profits or getting caught in a whirlwind of uncertainty. Volume, often referred to as the lifeblood of the market, provides invaluable insights into the strength and direction of price movements. In this segment, we'll explore how volume analysis can empower traders to make more informed investment decisions in the dynamic realm of Bitcoin. Volume analysis involves studying the number of Bitcoin units traded over a given period, typically depicted as bars at the bottom of price charts. This metric serves as a window into market activity, revealing the intensity of buying and selling pressure. High volume often accompanies significant price movements, indicating strong market participation, while low volume may signal indecision or lack of interest. Common volume indicators include the volume-weighted average price, VWAP, on-balance volume OBV, and volume moving average, VMA. Analyzing volume patterns can unveil crucial insights into market sentiment and potential price movements. Volume spikes, for instance, often coincide with pivotal moments in Bitcoin's price trajectory, signaling increased investor interest or urgency. Additionally, volume trends can provide clues about the sustainability of price trends, with rising volume supporting bullish momentum and declining volume suggesting weakening conviction. Traders also look for volume divergence, where volume trends differ from price trends, which may precede trend reversals. Volume acts as a powerful confirmation tool, validating the validity of price movements and filtering out false signals. For instance, a breakout above a key resistance level accompanied by high volume suggests strong buying pressure, increasing the likelihood of a sustained uptrend. Conversely, a breakdown below support with low volume may indicate a lack of conviction, raising doubts about the durability of the downtrend. By paying attention to volume confirmation, traders can enhance the accuracy of their trading decisions. While volume analysis can provide valuable insights, it's essential to use it in conjunction with other technical indicators for confirmation. Traders should also set realistic expectations and understand the limitations of volume analysis, as it may not always provide clear signals in choppy or low-volume markets. Additionally, implementing risk management strategies, such as setting stop-loss orders and diversifying portfolios, can help mitigate losses and protect capital in volatile markets. We hope you have enjoyed this guide to Bitcoin technical analysis. If you are ready to supercharge your Bitcoin trading, check the link in the description below for the 100% free crypto trading masterclass.